Decided we were going to start just a few minutes early, talk about option Omega. Tomorrow afternoon, I'm going to be running a stream. I'm going to say 1 o'clock at the moment. If that does it, then we will come up with something else. But I'm pretty sure that 1 o'clock tomorrow works. And so we're going to be doing that. Also, the options class group coaching is going to start on the 25th. You can go to the welcome channel, go to coaching to see the latest video on that and get the information on that. This is one of the back tests from my Iron Condor style strategy. It's a short duration. You see average days in trade is less than 4 days in the trade. 19 out of 20 winners, which the wins alone really isn't the big deal, right? Because when it comes to options on the sell side, we usually focus on having that high win rate, but we also have to make sure that the winners and the losers make sense. Well, the max loss on this strategy is 2,700. That's the worst trade out of all of them. And yet the max winner was 34. And when it comes to things like credit spreads and iron condors, you almost never see these kind of numbers. It's almost always backwards, right? The max losses, these really big, stupid numbers, and the max win are usually these tiny little numbers. But my strategy is different than just your regular run-of-the-mill system. I just couldn't figure out why it wasn't working in the current market environment. Well, I had an idea of why it wasn't working. I just didn't know what to do to fix it in the current market environment until options Omega come along. There wasn't much that I could do to try to solve the problem either. And this one back test right here is only 2022. So it started January 1st. It ended June 8th. I should run an update on it, see what it is now. But that generated 20 trades, 19 wins, staying in a trade around 3.5 days, almost 4 days. And it doubled the portfolio, starting with 20,000, ending with over 40,000. Not too bad, right? That's the kind of mechanical system that we're going to be doing the live streams on. First, explaining what we would do, and then going through the steps to see if we like the results, and if we don't like it, what are we going to change to make it into something that we do like. When I made this, I sent it to Troy. That's the guy that built the Options Omega platform. And he looked at the numbers and said, what are you basing your entry off of? You know, like when did you decide that it was time to go put the iron on? Because that would be where everybody gets hung up. Well, when do I do it? I guess we'll talk about that tomorrow afternoon, right? Because it's a big part of the whole package. This is one that I was currently messing around with. I don't trade a naked call in the SPX like this, but certainly could. I think the thing that I was really hung up on is when I was working on this back test, a naked call did fine. A call credit spread did not do fine. It was kind of getting ripped apart. And yeah, I'm gonna have to revisit it. But we will be using the back tester tomorrow afternoon. Come in and live stream, and we're gonna work on the iron condor first because, well, that thing pretty much pays for your subscription to 1 year of options omega, just that one single iron condor trade. So I'd want to make sure that we get everybody going on that one first. That way you've at least got your cost covered, and then we can flush it out and have more than one iron condor strategy, right? We want more than one vertical, more than one iron. That would be the ideal way to approach it. We still got to give it a few more minutes because we're still a little early. Since we're giving it a minute, we're still a little early. I did a new indicator. It's over in the Thinkorswim Discord. This one is a cumulative volume index. It's an internals indicator, so it's going to look at the NYSE or the NASDAQ in its cumulative volume. Think of like advancing versus declining issues, only it would be the volume, right? So it's not something necessarily that we would want to use on an intraday basis. It's not that kind of indicator. It would be more of looking at kind of the bigger picture, right? But scroll down to the bottom. Where did I put that? Under volume, cumulative volume index, CVI. I'm going to be updating this link, so if you don't rush over to get it right away, it won't be a bad thing. I made a little update to it so that it will tell you what exchange you're looking at, because you can change it from the NYSE to the NASDAQ. And then I added one more moving average so that we got like a fast average and a slow average. All right, it's close enough now. We can go ahead and get started. All right, good morning, everybody. For those that showed up late, we started a little early to talk a little options omega and to mention that the options class starts this weekend. And if you want more information about that, when you're on the Bullish Bears Discord, go to the welcome screen, come down to coaching. There's a short video and a description in there about how to reach out to me. Otherwise, those classes will start Saturday. And Yeah. All right. So as we usually do, we want to start with FX Street or Finance Juice, either one. I like to use Finance just because it has speakers on the side. If anybody is going to be out chipping their teeth today, this is usually how I find out about it. We do have the European Central Banker, Vilroy, speaking today at 2 o'clock. We have additional auctions today. For those of who have watched my streams constantly, you'll know that that's a big one for me. Um, Catching midday reversals is kind of an art more than a science. And a lot of times those reversals start right at 11 or right at 11:30, or even sometimes, oddly enough, right at 1 o'clock. And that's where those additional auctions are at. We come over to Finance Juice to see what's going on in Europe. Right now, it's the middle of the day in Europe. So they have people, having press releases, talking to the news agencies, holding press conferences. So you want to keep track of who's talking, what they're talking about, what's the narrative in the market. And we are getting a little bit of a rally this morning. But when you look at the why behind it, there really isn't much of a why. It went from everybody's scared last week. That was the narrative for why we're falling. Why are we falling? Oh, everybody's scared. They were worried about recession, blah, blah, blah. And then now, why are we going up? Oh, well, their fears are eased a little bit because Powell managed to not eat his foot yesterday when he was talking to the Senate Banking Committee. Well, Powell's going to be back in there today talking to a different committee, and he has to yet again run Operation Don't Rock the Boat and hopefully not screw anything up, not say anything stupid, or inadvertently say something that he shouldn't say. And, if you think that that can't happen, yes, it can. It's happened before. It can most certainly happen again. And he's not that eloquent of a speaker to begin with, right? And then, of course, all those different people that are questioning him like to get those gotcha questions, and they want to grandstand and ask just completely stupid questions, and some of those can draw out some very weird answers. So we still have to watch that. We have a lot of econ on deck today, so it's just going to be that kind of day, right? When we're looking at Finance Juice, we also want to look to see if there's anything going on around the world that we think could turn into something extreme. And the example that I always use is when that boat was stuck in the canal, it turned into a really big deal, right? Most of the time, there's not going to be something like that. You just show up, take a look around. If there's nothing really standing out like that, then move on, right? Don't try to make something up, turn something extreme that wasn't there. The weekly expected move on the SPX is 37.95.48. Something to think of today is if we open gapped up, looking at the ES futures, where we are up nearly 0.75%, we're very likely going to open above that weekly expected move. So something to keep your eye on. All right, so we want to go to the Market Watch tab. I usually come here every day because I want this screen to be in the video. If you are going back in the past and you're looking at intraday price action and you're trying to figure out something that happened in the chart that day, one of the things you want to be able to answer is, was there any econ today? Right? If you go back, say, 3 months ago and you're looking at a V bottom at noon in the ES and you want to know, was that directly caused by an economic event? Without these videos, that could be kind of tricky to answer. But if you know what day it is, you can go in and you can watch the morning briefing from that day. And within the first 10 minutes or so, you're going to see this screen and you'll be able to see what econ was on the table. So, yes, it is there as a part of what's happening on the day, and we're talking about it, but it's also there as a part of your ability to go back, right? So these videos have more validity than just today. It is a full house. This looks like a lot of stuff, but really there's only a few time frames that matter. So 8:30, 9:45, 10, 10:30, 11, 11:30, and 1 o'clock. Make no mistake about it. Even though you can go to something like FX Street and it will say that there is a low impact expectation for these additional auctions, these things move the market. And they're very often a key part to me being able to call a V bottom or a reversal in the market. And they say that you can't call bottoms and they say that V bottoms are hard to play. Bring that into the equation and it changes the game. All right. It never hurts to go out to the daily chart, take a look around. Most of the time, you're going to go out to a daily chart and there's nothing there, but that's okay. It's fine if you go out there and you don't find anything, at least you looked, right? What you don't want to do is never go out there assuming, well, I'm a day trader. There's nothing I need to see on that daily time frame. Don't make that mistake. While we're out there, it's also a good time to ask the question, how far away from the 10 period moving average are we? So the one that we're looking at right now is the weekly. How far from the 10-week moving average are we? Well, we're at 5.7, and that's actually lower than what we were, which was past 7, right? We were past 8, really. So we were extended significantly past that 10-week moving average. A 10-week is like a 50-day moving average. So let's flip it over and say, how far away from the 10 are we? We're almost ready to cross it. So now we would want to put that 10 period daily moving average on. Because if we're going to hit the 10 today, we want to know about it, right? And you can see we would hit it today, but we're still on the daily and we need to see that daily moving average on the intraday chart. So type in the word daily on your thinkorswim and you get daily SMA. What this will allow you to do is plot that 10 period daily moving average on your intraday chart. Right? That way, if we're going to hit it, like we did right there, you'll know about it. So we did hit it. We pulled back from it. We broke through it. We're now above it, and we've pulled back to it, validating the old resistance as new support, which is what price likes to do when it comes across a resistance area like that. So, hey, we got a 10 period crossover. When we're above the 10, we're bullish. When we're below the 10, we're bearish. When we're moving back towards the 10, we're in a change event, a crossover. So that's good to see. But we're still underneath the Wednesday, Thursday level. So that 38.20, 38.40 zone. If we look at the ADR, we got half the ADR in red and the full ADR in yellow. What I mean by half is if you think about where we started in the Globex at the Globex Open, the ADR right now is 2.75. And so this entire width from red line to red line, that's 2.75. And from the mid, we went up or down half, and that would be the ADR. The yellow line is if we were to start at the Globex and move in one direction, the full ADR, it would be 2.75. So if we move half the ADR, we're going to have an inside day breakout. Right now we are inside day, so we are inside yesterday's price action. We're going to be looking for an inside day breakout that actually sticks. Yesterday we had an inside day breakout, but we couldn't keep it, right? We kept falling back through it again. So we're going to be looking for an inside day breakout that actually holds today. My focus would be an inside breakout to the upside, since that seems to be what the market is continuing to try to do. There's a lot of analysts out there right now that says this entire basing pattern and this little bit of a run to the upside are shorts that are covering and shorts that are getting squeezed, which makes them cover whether they like it or not, and that it's just a little bit of a move up. If you've ever watched any videos from the guy who created the strat, he talks about popcorn stops or something very similar to that. I'm sure I'm not saying it correctly, but his logic was you want to think about where the shorts have their stops, where a logical place would be for places for people who are running a stop on a short trade. So, for an example, if somebody had gone short this day, where would their stop be? Logically, say above that candle. Or if they had gone short this day, where would their stops be above that candle? And you would keep in that logic, right? Kind of walking it through, thinking about where those are at. And remember, this isn't my logic. I'm just talking about what his theory is on these moves up off of the bottom. So what happens when you get this basing pattern and then you get a pop to the upside? If you triggered into a bunch of stops that were resting up there, you start to get this big parabolic candle, this big move, which could then break you into another level, which could break you into another level and then into another level. And every one of those candle days that you're passing has another set of stops there, another pool of liquidity that you're piling into, causing more squeeze, more pressure, more buying, because those shorts have to buy to close. And it just often creates these extreme parabolic, beautiful ripping moves off of the lows or off of a basing area. Having said that, it doesn't quite fit, because that's the narrative right now. Oh, we're triggering stops and all these shorts are getting squeezed. And really? Because we haven't crossed any candles yet, right? That the stops would be up here, and we're not there yet. Now, there could be an argument that yesterday there's some stops above that, right? And should we get there, we would trigger those stops. That would propel us up into the next level of stops, and that would propel us up into the next level of stops, and the next level, and the next level. But we're not there yet, right? We haven't even gotten outside of our own price action from yesterday yet. So that narrative doesn't really fit yet. Should we do a breakout today above 38.05 and trigger into those stops, triggering more buying to propel us even higher, then we could begin the discussion about triggering into those stops, right? Otherwise, it's just short covering. And short covering would make sense when we're looking at this basing pattern down here and a market that is failing to go lower at this point. Shorts would want to cover after that last move and look for another pop to the upside to begin a new short trade. That's what I like to do. So the focus right now is going to be on an inside day breakout. If we can maintain above that 10-period moving average and get above yesterday's highest point, the ADR would be our first target. Now, remember, in a bear market rally, we can often see very extreme rallies. So if 2.75 is a normal move, then we want to consider what would an unusual move look like. What I like to do to answer that question is take the ADR, divide it in two, add that new number to the current ADR, and then plot that level out. So that might sound a little confusing. It's not. Just kind of think through the pieces here. 2.75 divided by 2 gives us 137. Clear everything out. 2.75 plus 137 gives us 412. And that's percent. So from the close or from the Globex open, whichever way you want to go, we'd be looking at a 4% move, 4.12. Close enough. That puts us at 39.11-ish. There's a cog line at 39.11. If we get that close, that's what I would aim for. That would be the next move past the ADR. Now, remember, we're talking about if the market went extreme today. From 37.91 to 39.11 is a significant move, right? And nobody is saying that I think we're going there today. I'm just pointing out that if we were to get bullish, that is easily on the table. And it would resolve that 38.50 consolidation from a few Thursdays ago, right? So that'll get us out of that big red candle that we've been focused on the daily. This big red candle here. So what if everything goes the other way? We've been talking a lot about an upside breakout. What if we have a downside breakout? Well, we would first need to resolve our own Globex low. We would then focus on yesterday's low. So we're talking 37.35. I like to hit that open. So 37.23. 37.03. We're going to skip that 03. That wasn't the lowest spot. 36.39. And the red line that we see here at 37.09, that's half that ADR that we were talking about, right? So we could go all the way to 36.93 and we would still be inside day. We would need to get below that before things began to get really negative. I don't know what a Bloomberg terminal costs. I believe it's 17 to 21,000 a year. I may be off on that by a little bit, but not by very much. The third scenario, guys, is that we don't do anything today, that we maintain inside of yesterday's price action. And considering how big yesterday's range is, it wouldn't really be much of a surprise, right? Sure, we're near the high of yesterday's range, but nobody says we actually have to break out of it. So with that in mind, we could very easily stay between 38.05 and call it 37. So from 38 to 37, we could easily just stay right there all day. It doesn't owe us a breakout. Out of the three scenarios, it seems most likely that we're either going to hold the range or that we're going to break to the upside. So when we think about trying to answer the question when what should happen doesn't, that's where the market tends to make some of the biggest moves. Because if everybody thinks we're going up and the market starts to go down, we catch all those people off sides and things can get really extreme. The bidless beast, a significant swift move to the downside. So, kind of keep that in mind. There is a lot of econ on deck today, and it will only take one set of numbers to really spook the investors, right? To spook the market. All right, so we're looking at a 10-day, 30-minute chart. We've got a very narrow volume profile. And those levels that we were talking about, the 39.11, I didn't just pull that number out of my hat, right? There is some volume there. Call that a volume node, right? So is it enough? Would we look at that and think that it's a significant level of resistance? No, absolutely not. But it does imply that should price get to the 39.11, which is a cog line, there is very likely going to be a reaction from the market. I heard something the other day. It was the way that it was said that I really liked it. When somebody said, "You think we're going to bounce?" and I'll use 39.11, but that wasn't the question. Do you think we're going to bounce at 39.11? And the answer was, I don't know. I'm not a predictor. I'm not going to try to sit here and predict if we're going to bounce there or not. That's not my job. I'm a reactive trader. If we get to 39.11 and then we bounce, I will trade it. I like that answer because I get that question all the time. You think SPY will hold that low? You think the NASDAQ will break that high? No, nobody cares what I think. I don't try to think about if it's going to break that high. I don't try to predict what it's going to do when I get there. All I have to do is recognize that this is an inflection point, and when price gets there, there's very likely going to be a reaction. Whatever that reaction is, I will trade that without any guesses or assumptions or predictions or crystal balls or rolling the dice or talking to the Ouija board or reading tea leaves or any of that. Farmer's Almanac and where the moon is today. Yeah, whatever. We are back above the point of control, right? So that would be the red line here. That is the greatest amount of volume within the 10-day time period, right? So that's how it gets marked. The yellow line is the value area high, and this yellow line is the value area low. That is the point of control. 70% of all of the volume in the last 10 days is within this range, and the greatest amount of volume is at that red line. When we're in the box, we want to ask the question, are we at the low of the box? Because if we are, we expect to go to the top of the box. Are we at the top of the box? If we are, we expect to go to the bottom. Well, we're not at the bottom. We're not at the top. We're near the top. When we get to the top, what's the expectation? That we're going to turn around there and continue to go back down to the bottom of the box. That would be the first blush guess estimation. That's what we would expect to see. Do I think it's going to do that? Well, remember the other answer. I don't have to presume to know what it's going to do. Just get there and look for the reaction. If we do find ourselves outside of this box, we usually start asking the question, are we continuing to move farther away from the box, or are we moving back towards the box? Right? Of course, we're not sitting in that situation at this point. All right, we're looking at a 5-day, 5-minute chart. We call this mapping out the 5x5. We had an untouched point of control from the Sunday into Tuesday, or from Friday, Tuesday. But that got taken out 2 nights ago, so no reason to carry that forward. We had an untouched point of control from yesterday, but we hit it in the Globex about an hour or so ago, so we don't need to carry that one forward. We don't have any to carry when we don't have any to be concerned about unless we start getting into that top-side breakout. Now, you could carry the value area high forward. It looks like we hit it, but we didn't break through it. I don't really have the validity for that. If you study volume profile, if you get to the point where you want to learn about this study or this indicator, it is a common logic to carry forward yesterday's value area high and value area low, at least until it gets touched or breached. So an argument could be made that you would want that line there. I don't do it. And that doesn't mean that I'm right and they're wrong. I just don't do it. Right? I've got enough pivot points. I don't need that one. The idea is to be consistent, though. If you want to carry it forward, always carry it forward. And if you don't want to carry it forward, then never carry it forward. But don't be wishy-washy with it. Do it one day and not do it another day. And you know, consistency is really a key piece of technical analysis. All right, so Bitcoin is bid up more than 2.5%. That is good from a risk on scenario, right? I've had people asking what I think this is correlated with. I really don't think it's correlated to anything in the current market, at least, say like the last few weeks. I'm not looking for correlation necessarily. I'm looking for allocation. In the current marketplace, having a place to go where these fund managers, they don't want to go to cash because they don't want to pay the penalty. And on the other hand, they want to kind of avoid risky assets. And this is 100% a risky asset. So if we see them piling into Bitcoin, we can tell that they're in a risk on sentiment, right? That they're feeling frisky, they want to get risky, and they go and jump into the Bitcoin. That's all I'm looking for. Money flow. Are they coming into it or getting out of it? And the pace and the scope and the change, it's called ROC, right? Rate of change. Rate of change is the key piece of trend and momentum that's been used for 100 years. It's been the formula used in everything. The only thing used more than rate of change is standard deviation and linear regression kind of stuff. If you were to go read scientific papers on the marketplace, rate of change is going to be the one thing that comes up a lot, the most. One way that you can do that kind of research is Google Scholar. It's a place I learned about when I was in college. By using Google Scholar, you get access to college papers, legal papers, case law, peer-reviewed written articles, not just some Joe Blow's blog post where he can say whatever he wants without anybody challenging him. These articles are peer-reviewed. They may be controversial at times, and people may disagree with what's written, but if it's something that has been proven or is provable, then it gets published, right? And if it's just wishful thinking and fantasy land, then it gets shot down and it never ends up into a place like this. The wealth of knowledge here is completely insane, and you can look up just about any subject you could imagine. Rate of change. So we're bit up in the Dixie a little bit, not very much. That was a significant move around the 3 o'clock this morning. Still not quite sure what we want to do with it, but it did set a high less than the previous day, so we didn't get that breakout yet. Watch the dollar. As long as we're staying below that 105, we should be able to maintain a risk on sentiment within the indexes, right? Within the NASDAQ and the S&P. As long as we're staying below the 105. We start seeing the dollar get above that 105, start looking for the S&P and the NASDAQ to come in with weakness. The VIX has been a total dog. It's absolutely worthless in trying to gauge or measure what's going on out there, and that hasn't changed. So we kind of look at it, but it has been worthless most of this year. Today is no different, but look for 32. As long as we stay below 32 or even 31 and a half, if we stay below 31 and a half, we can maintain our bullish posture in the NASDAQ and in the S&P. But should we break above that 31 and a half, And should the dollar get above, 105, then any kind of sustained rally in the S&P and the NASDAQ is off the table. Yeah, Gerald, I certainly can, and I already have. Um, they are all in this Discord that I created for Thinkorswim. It's called the Thinkorswim Workbook. There's thousands of studies, chart templates, watch list indicators, you name it, they're all in here. So the easiest way to share, rather than just giving you one single chart, it would be better if I just gave you access to all of it, right? And that way you can perhaps look around in there and maybe find something that you like other than this chart, right? So let me just grab the link. Maybe I'm scrolling through the wrong one. Yeah, we'll just keep going. Aha! I thought away. And if you don't have a Discord, then I apologize. That won't really do you much good, right? In that Discord that I just shared the link to are 10 videos that show you how to set your Thinkorswim up like mine. For anybody who's in the Bullish Bears Discord, if you want to know where those videos are at in our Discord, I believe it's the after hours chat. Check the pin, just kind of scroll down. You'll see top down charting, Thinkorswim setup 9, 8, 7, blah, 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 all the way down to 10. Cool. There's no private indicators in there. Anything that would be in there would be like free to use public indicators. Obviously, I don't want to get sued by sharing some custom indicator that's a paid for indicator. But everything that I've come across that's free to use or anything that I've also made is in there. Because I don't sell indicators. If I make it, I'm giving it away. I'm a trader, not an indicator salesman. Nah. All right, so everybody, back to watch the dollar above 105 get suspicious. With the VIX, 31.5, same thing. Become nervous, get suspicious. Watch out for that failure. We're looking at NASDAQ here. This is how many stocks in the NASDAQ 100 that are above their 200-day moving average. And I'm on a daily time frame. And as you can see, imagine, the 2020 COVID crash. And we had a lot of names that fell below their 200-day moving average. And we were at some extreme levels. And if you go back, there's those same levels. And those levels were worse than these previous levels. Well, we got a new low now, right? Now I'm going all the way back to like 2015. And we are sitting at lows now that we have not seen in almost a decade, right? Let's go back up to 2012 so that we have, a full 10 years there. Just make sure we're not missing anything. So 10 years, we are at levels that had not been seen in 10 years. The number of stocks that are above their 200-day moving average is at a very, very, very low level. From a contrarian point of view, this would be typically where everybody says, "Ooh, I think it's a good time to buy." Typically is the answer there. Should we start buying just because of this? I mean, you're gonna have to take some pain if you do that, right? And I'm willing to take the pain. I've already been starting to buy up some companies that I like, and I'm taking heat for it, right? I'm red in the portfolio, and I expected that when I started buying. But I was taught that when it comes to calling bottoms in a swing market, You can't call bottoms. You can't call tops. You can accidentally get it right once in a while, but you did it on accident, right? There's no science to calling a bottom on a daily or a weekly chart. The only thing that you can ever do is look back and validate that, yep, that was the low, and then look at the checklist for calling bottoms, right? So if you want to start buying in your long-term portfolio, you have to start doing it while we're still falling. Otherwise, you wait, we flip over, we usually get those ripping rallies to the upside, and you're missing out. And of course, then you're struggling every day to try to get in, and you say, well, it went up 3% today. I don't want to get in because I feel like I'm getting in after it moved 3%. And then the next day it goes another 3%. You say, well, I was going to get in, but it moved 3% and I don't want to get in. So you just got to take the pain, right? If we're talking about the buy and hold accounts, right? The longer term swing trades, the time to, and they call these current market that we're in, they call these like once in a lifetime events. And obviously they're not, right? We had one in '07, we had one in 2000. So it's not a once in a lifetime event, but it is what they call it. This is your opportunity for the next decade to buy into some names that you may not have a chance to buy into again with these kind of levels for another decade, right? We're talking about people that were complaining, and I was one of those who was complaining when I was new to trading, and I came in 2018, and I seen the level that Apple was at or Amazon, and I complained, oh gosh, it would have been nice to have bought that when it was half that price. You kind of got that choice right now, right? I mean, it's not half price, but it's certainly off of its highs. Make no mistake about it. I'm not saying that we've put in a bottom. I'm not saying that we're done falling. Not even close. But I am saying that it's a really good time to start thinking about your longer term portfolio, your buy and hold, and what names you would like to own for the next decade. And start thinking about allocating into those things. A little at a time. I like to average in on that kind of allocation. I've already got a dollar value in mind or a share value in mind. And then I slowly allocate a little bit at a time until I have my full allocation. So for an example, I've been buying into Intel, just 10 lots at a time, 10 shares here, 10 shares there, just kind of slowly adding in more and more shares. No big hurry. And I usually do it after it makes a big move. You know, if it drops down really good past my last buy-in spot, then I just buy another 10 shares. Once I get 100 of those things, I'll start selling options against it because that's kind of what I want to do with it. But we are not done by any means. At least I don't think we are. 3,400 is still on the table, if not 32. Before we're much more likely to see 36 and 34 before we see 46 or 48. Let's say it that way, right? Out of the legacy sectors that we would use with the S&P and the NASDAQ emerging markets, well, the S&P has 11 sectors. Those legacy sectors, they don't really give us everything that we need, right? There's no EV sector in the S&P 11 sectors, and there's no pot sector in those 11. And those are diverse markets that often don't do what the rest of the market does. And so we want to take the opportunity to break those sectors out. Well, one way you can do that is to kind of make your own ETF. If you use the common logic of that, right? What's an ETF? It's just a basket of stocks. The SPY, for an example, is a basket of stocks. So if I wanted to make my own ETF, I could just gather up a list of names, say like crypto names, and make a watch list of that and consider it my crypto index. Now, my list of names here in this crypto index came from the Smalls Exchange. They have a futures contract. And of course, futures has to represent something. So it's the Bitcoin futures. If you open it up and look at the basket of stocks that is in their futures product, it's all these names. So that's where my index came from. I just opened up their futures product. I looked at the components, jacked all the names out of it, made my own watch list. I will be adding BITI. That's the new Bitcoin short ETF. So I'll be adding that to the list. Might as well add it while I'm talking about it so I don't forget. BITO is the ETF for Bitcoin, but now we have a short as well. Yay. Make sure it recognized it. Yep. So as you can see, we're up in Bitcoin. These names are obviously not all Bitcoin, but they're Bitcoin related, right? So Taiwan Semiconductors, AMD, NVIDIA, PayPal, Square, those kind of names are on this list, as well as things like blockchain, Riot, Mara, right? So we're risk on there. The names that aren't, kind of pop in and see what's going on with Taiwan Semiconductors. That is most definitely not doing what its peers are doing. I would be keeping an eye on this because when we have a name stand out in its group, it's either the leader or the lagger. So Taiwan Semiconductors is leading to the downside, and none of these other names have caught on yet, or it's doing its own thing, say news related, CEO got arrested, or they got, something happened that drove their stock down, or it just has not yet turned and started to participate with the group. If there was no bids this morning, if it had not been traded this morning and we were still down from the after hours of last night, then that answer would make more sense that it has just not moved yet. But it has been moving in the pre-market. These aren't after hours moves from last night. So it is not doing what its peers are doing. I would definitely keep my eye on that, check the news, find out why. That could be a really great play. TSM is typically a good thing to trade. Take a look at this. It has weekly options, check, right? It's like one thing we got to see weeklies or it's not even worth talking about. There is some liquidity, right? So things like open interest. We want to find that there are already traders that are in this thing. So the open interest gets a little light a few weeks out. If focus on the monthlies because it's where the institutions are. You should see some pretty good numbers in there. And it's not hard to tell where the institutions are at, right? Look at their spreads. 90, 85, 85, 70, 80, 80, 70. They stand out pretty easy, but there's some liquidity. The bid ask spread, and yeah, for a company of this size, this is not a really wow bid ask spread, but it'd get it done, right? About 10 cents, 8 cents. It's not too bad. Could be worse. Plus, the market's not open, right? So that would help too if we were to open up, maybe get a tighter bid ask spread. But as you can see, I mean, this is a tradable thing, right? It fits the liquidity requirements. It's got weekly options. It's got a reasonably decent bid ask spread, and it's got $1 wide strikes, right? So it's like checks all the boxes. So if there's something up with TSM today, you'd most certainly want to find out why it's not moving with its peer group, why it's not doing what everything else is doing. It's not in there. Yeah, so whatever it is, it doesn't seem news related. All right, so crypto is one. The pot stocks is the other one. Uh, again, looking at sectors that perhaps don't move with the S&P. right? Because if 9 out of 10 stocks are all going to do what the S&P is going to do, then maybe we don't want to trade 10 different names that are all doing the same thing, right? Maybe want to get a little diversification. So looking at something like the pot stocks may offer that opportunity. They're also bid up this morning, not much of a surprise. Few names that are flat or down, but otherwise looking pretty good. So we're going to be coming into the open with basically everything bullish, right? 9 out of 10 stocks are all going to be bullish. Notice what is down though this morning: silver, gold, real estate, natural gas. It says the cloud is down, but I would almost bet that it just hasn't had a bid this morning. Yeah, those are last night after hour numbers. Cloud is not a super heavy liquidy option or even just a product. It's not super liquid. So it's still showing us yesterday's close or yesterday's after hours trades and not any in the pre-market. Once it does catch anything in the pre-market, it's very likely going to be in the positive category. I don't see today as being an alpha protocol play. I really don't, not with Powell talking and all the things on the agenda. So don't be expecting that much correlation. Something like 80 out of 100 or 85 out of 100 should be good enough. That's what I got for you guys. Be careful, be safe, and I will see you all tomorrow.